Greetings, beautiful traders. I welcome you to this wonderful video. So I'm going to be sharing with you on steps that you need to follow when analyzing the forex market or the stock market and any other currency or foreign exchange market. So before we can get started, I would like you to show some love to the channel by just clicking that like button, commenting below whatever that you love to say. It helps the channel a lot. So the first thing that you need to observe as a trader, it is to be able to spot levels. That's the first thing. Spot levels first. It's only significant levels that you should spot, and significant levels, we know that it is the levels where price have been rejected significantly. For an example, let me zoom out. We have this resistance level here, which was tested twice and then it converted and became support. So that's a key level. Same thing, we have this resistance here, which converted and became support. It's a key level again. Same thing applies here. We also have these key levels because you see that price was going down and that's where it ended. Né? It's another key level. Same thing applies here. It's also a certain key level because that's the highest point and currently that's the lowest one. So once you are able to identify this, that's where now you need to go to the next step by seeing the trend. So once you are able to spot level, remember, support and resistance is not every high or every low, but it is those significant ones where price reacted firmly. And then once you spot these levels, that's where you go to identifying your trends, that okay, my market is actually moving in a trend, in an uptrend or in a downtrend. Once you are able to spot the direction of the market, then that's where you're going to put these levels into action, because that's where we use these levels to enter and to determine our targets and everything. So we know that price reacts on our resistance and support. So once you're spotted that, you know that okay, price is touching my trend line here, it is going up, but here it is about to reach this level here where it is a significant level because that's our highest point so far. So it also helps you to time your exits and your entries. So okay, once you are able to identify levels and trends, the next thing that you need to put in mind, it is the ability to see the waves. When I'm speaking about the waves, I'm speaking about the two different types of waves. It is corrective. What is this? It is corrective and impulsive waves. It is corrective and impulsive waves. So you need to know that in an uptrend, the impulsive waves, it is them that are going up, and the corrective waves, it is them that are going down. So the ability to spot these waves, it is in order for you to know which wave you should enter in and which wave you should wait in. For an example, we do not trade in corrective waves, but we trade in impulsive waves, because corrective waves, they are always against the strength, they are always against the power. So we are looking forward to move with the momentum, we are looking forward to move with the power. So that's where we focus on impulsive waves, the waves that are going with the trend. So it's trend trading, right? So what you need to observe in corrective waves, it is only patterns and then the right time for you to enter. For an example, with this corrective wave here where price was flowing all the way down in this manner, let me clone this one. So you can see the channel of the corrective wave here. So you can see that once this channel is broken, that's where you trade with the impulsive, meaning that's where you enter impulsive here or in the retest here. So it's either you wait for it just to break out or you trade a retest. It's up to you. Now that's where the patterns, they come in hand. That's the last part, the patterns, that's where they come in hand because we trade with them. For an example, this is a flag pattern. You can see it was an impulsive and then a corrective and then it's an impulsive again. So it's a flag pattern. That's what we use to enter our trades. We don't just enter using the trends, but the trends, they're here to show us the momentum and the possible areas for us to see and observe a good entry point. So we enter through the break of these patterns. So it's levels, trends, waves, and patterns. Those are the 4 things that you need to consider as a price action trader. So in terms of patterns, there is a video that I made about patterns. You will see it in the description below. You will see it in the description below on how to enter with patterns. So I hope this is helpful, guys. Those are just the 4 aspects that you need to study in details and understand them. True levels, meaning true support and resistance, or supply and demand, and then trends, how to spot trends and the strength of trends, and then waves, which one is an impulsive and a corrective, when is a corrective ending and when is an impulsive beginning. So, and the last thing, it is patterns, understanding the relationship to patterns with entries or the price. So once you are able to understand all these things, that's when now you are good to apply it and make returns out of the market. So remember to like, share, and subscribe. Thank you for watching this video.